Brought to you by Michelin Canada. Michelin, a better way forward.
So Scott, as an owner-operator, the biggest investment you have is the truck itself, and I'm assuming there's some pretty substantial tax implications to how you buy that truck, how you finance it as well. When you're in the market for a truck, what are some things to keep in mind before you make that purchase that might benefit you at tax time?
Well, for sure, people need to consider, obviously, let's just say it is your tool of your trade. So I would never get too involved in trying to tell someone what kind of truck to buy, and meaning features, of course, and the speccing of the truck, but obviously that's critical. But then just as critical really in the long run of that thing is the financing of the truck. And in today's world, you've got either you're buying it and you have a loan, or you're leasing it and then you're agreeing to make a flow of payments for the next 36, 48, 60 months. So what people need to understand is that there are differences. And again, as we've talked about, there's not a perfect answer. Very few in life, never mind business and everything else, there's a perfect answer to anything. There are some pros and cons to both of those financing vehicles, and then quite simply, the owner-operator has to decide which of the ones are going to help him sleep at night. Which of the ones are better? I'm more likely to benefit from this than this, so that's the way I'm going to go. The biggest difference really is the write-off, and it's all timing, right? Whether you go buy a good new used truck or a brand new one, and you spend, let's go down that scenario for a minute. If you were to spend $130,000 on a new vehicle, assuming that your interest rate that's buried in your lease is the same as the interest rate that's stated on your loan documents are the same, then you've got $130,000 plus the same amount of interest to expense over the coming number of years. And the difference between a buy and a lease is just in the timing. The buy allows you some big expenses in the first 2 years. You got some big claims in the first 2 years that in the teeter-totter though mean that there's less in the last couple of years. So where leasing is more consistent, obviously you're making that payment every month. Your expense is 12 times your payments. Also then, whatever you put down as a downstroke, Revenue Canada makes you divide that over the life of the lease. So if you put $15,000 down on the truck and you've got a 48-month lease, you're just simply dividing that through and you're expensing that every month in addition to your 12 monthly payments. You're not expensing that $12,000 payment up at the front. So if people have purchased before, purchasing again might make sense for a couple of different reasons. Because if you're in a year 5 or 6 or something on your truck, getting that big kick of depreciation when you buy the new one could be a great advantage to knocking down a tax bill that year. Because obviously, again, if your depreciation's low, that means your net income, you're expensing less, your net income is higher. So that would be a great way to get back on the top of the slide, if you will, and get a high rate of depreciation for the first couple of years and to go again. But you have to know and remember that it's coming, that you're going to run out. So again, we'll often advise people that, if your tax bill is lower than normal now because of a purchase, well, as crazy as it may seem at first, to suggest that they actually pay more tax, but if it saves it for a longer period of time, then on the balance you might be lower overall.
Now, do most truck dealers have a good handle on this, or is this like, as you spec your truck with a salesperson, should you be, I've heard you say it before, speccing the financing with your accountant?
Right. You should definitely be speccing it with your accountant because, and again, no offense to people at truck dealerships or the financing people inside of them, they're there to do their job, and that is to give you good advice and to help you buy the thing as economically as possible. But sometimes they're not going to know your personal details about your business and your situation, so their advice just might be wrong because they don't know. So again, if a salesperson or a finance person was to make a general statement saying leasing is better than buying, well, they're not wrong in saying that. They're absolutely not wrong. And for a first-time guy, that might be the best thing. But if someone's been in business for a while and had owned the one before, then leasing might be the worst thing for them to do on the next one. Mm-hmm. So again, It's not a matter of intentions. It's just a matter of the full body of knowledge, and you have to get the right people advising you on the right situations of what you're doing.
And when it comes time to finance that new vehicle, should you be shopping around for the best rate? Should you typically be going to your bank first, the dealership second, or vice versa? How do you finance a vehicle to
Well, I think what you should do when you're dealing with the dealership, you should, although it's hard to do, but what you should be adamant about doing is trying just to shop the truck first. And, but they'll always ask you what you want to spend, how you want to spend it, how you, like they always constantly sort of blend that in. And it's like anything. If you pour your soul out to everyone and you give everyone a whole bunch of information, well, they're going to tell you that they're going to use it to help you, and that might be true, but also sometimes it can be used to come back to haunt you and hurt you a little bit. So talk truck first, and talk specs, and then what that pricing is. Don't tell someone what you want your lease payment to be, because guess what? It's what it's going to be. Now that might be a great deal. It might not be a great deal, but you're never really going to know unless you are shopping every place else. But yes, shop the truck first, shop the financing second, at the dealership, of course, because you want to have a good relationship potentially with the dealership if you're going to be there in the long haul. But it doesn't hurt to keep anybody honest, and it might seem like a waste of time. Ask your bank anyways. It might not be. Again, depending who you are and where you are in your life, and what things you have, what kind of a history you have with them, and what kind of support you have in terms of your net worth and things, they might do it. Credit unions never used to do business loans 10 years ago, and now they seem to be doing them. They'll do them for the right people. So, and then go to other financing. It's the same as you would with your mortgage on your home. Most people now, yes, you deal with your bank and you push them and you can read rates in the paper and you go back and whatever. So that's a little bit easier. But where mortgage brokers have become a bigger idea, you got to use that when it comes to financing your vehicle. You just have to make sure that you're getting the right interest rate. And if someone's putting a lease deal down in front of you, if you can't do the calculations backwards to figure it out, then go to someone that can work it out for you to tell you what that interest rate is inside of that lease. Because most times, I can safely say most times over the years, people are pretty surprised at what I tell them the interest rate is inside of that lease. It's not what they thought it was, but yet, surprise, surprise, the payments are exactly what they wanted.
Right. What kind of homework should you do before you even go to the dealership in terms of determining whether you're in the market for a new truck or a used truck, or how much you can afford? Should you be reviewing that with your accountant as well?
Sure, absolutely. That comes back to a business plan and budgeting ideas. I mean, certainly it may be a little bit tougher for someone that's new into the business to know, right, what they're doing and what they're going to need and this kind of thing, versus someone who is an established owner-operator, and they know where they're working, they know what kind of dollars they're turning, they know what they need, and then, of course, like everything, they're struggling between what you need and what you want, but they know what they need, and then can go from there in terms of a budget and length of time and the mileage that they're going to be driving, how long the truck is going to live. Some trucks can, for some people, depending on weights and miles that they're putting on them, will last barely the 4 years. Some people can seem to drag a truck out for 7 or 8 years, depending on what they're doing or how they treat it or that type of thing. So you certainly have to be prepared for what you're doing.
So just like everything else, there's a lot of planning ideally that goes into purchasing a truck, that everything from the time of year to whether to purchase it or finance it. So if you're not blown up on the side of the road, it's a good time to plan ahead and do some homework.
Absolutely.